Well, not just that, it's been a 3x in a year kind of a story, the BSE stock, and of course much more in 18 months when you're looking at it. So let's quickly look at the bull versus bear case and try and balance it out, try and see what's probably what one also needs to be cautious about with the kind of run we've seen. Of course, benefits from financialization of savings. It's a duopoly industry where BSE is just one of two players, and therefore clearly it would benefit from that trend. But it just has a 10% market share in this duopoly, and therefore currently all advantage lies with the NSE, which is the other player. In terms of market share as well as in terms of robustness of the platform, NSE in that sense is slightly tipped and has a bit of an advantage in that sense. Let's quickly look at the other piece. Products are growing. Now, BSE has invested in some new products as well. On the options front, of course, there is a bit of regulatory advantage which has come or been thrown BSE's way. On the options front. The other is, of course, your Star mutual fund platform, which has done exceedingly well for BSE, especially over the last year or so, and continues to grow well. But what we have to factor in is competition and how NSE is going to do to counter some of these challenges which are being thrown, and some market share which might get diluted as a result of this. Now, the third point is that when you're looking at margins, you're expecting margins to get better. In fact, profitability and PAT is going to double along with EPS. You're expecting an EPS of roughly 75 rupees per share in FY25, likely going to 90 rupees in FY26. So EPS is set to double from the sub 50 number. Of course, regulatory action further could also dent that profitability a little bit, and one would have to look out for that regulatory action because there's plenty happening in this space. Last off, just with regard to valuations and of course a potential NSE listing, that is obviously going to work in favor of the BSE because that has been the case. The oversubscriptions, the likely excess money will flow into BSE, and that's one obvious positive. But the stock is up 8x in the last 18 months, and trades currently at 40 times FY26. I'm not so sure whether the kind of valuation that it's trading at prices in some of that advantage already. It's up 16% in trade today. Just in terms of what analysts are viewing this, or how are they viewing it? The average of Bloomberg analysts is 2837 rupees a share, which is a 26% downside from here. Is it a time for caution? Well, we've just thrown it open, both the advantages or the bull case as well as the bear case. Leave it to you.